Well, despite declines for Bitcoin today, MicroStrategy shares, well, they're higher. TD Cowen raising its price target on the stock to $1,560. That's $1,560 after MicroStrategy increased its Bitcoin holdings by another 12,000 Bitcoin. The total holdings about 205,000 now. Joining me now, MicroStrategy Executive Chairman Michael Saylor. Michael, it's good to see you. It's been a little while.
Thanks for having me, Julie.
So I want to start. I know that you're bullish on Bitcoin. I think everyone knows by now that you see a long-term store of value in Bitcoin. And you have said that you see it as digital property as opposed to thinking of it as a digital currency. So if you could help me understand, as you add more to the company's balance sheet, what the sort of end game is for those holdings on MicroStrategy's balance sheet.
Yeah, well, we think Bitcoin is the highest form of property. It's the apex property in the world, and it's the best investment asset. So the end game is to acquire more Bitcoin. Whoever gets the most Bitcoin wins.
Well,
there is no other end game.
But Michael, I guess what I'm trying to understand is, so if I think of it as digital property, and I think of analogies, right? I think of a real estate company that buys property and holds on to other kinds of property. They may not be the apex, but whatever kinds of property. I think of an asset manager that buys all kinds of different assets. Eventually, they sell those assets in order to make profits. But I don't think that is your end game, right? You're not planning to sell the Bitcoin at any point. So kind of what is the purpose of it over time?
Well, let's keep in mind the fundamental principle. What's the use case of Bitcoin? It's capital preservation. So if you have $1 billion and you live in South America, or you live in Asia, or you live in Africa, and you want the capital to last for 100 years, you're not going to want to buy $1 billion company or $1 billion building or $1 billion of land in any place in Africa. You're going to have to find some other form of property that you can hold for a long period of time. Let's take New York City. Developers of New York City in 1776 didn't have an end game. They've been raising capital to invest in New York City real estate at the all-time high for 300 years. If you went and talked to them today and you said, what's your end game? They would say, well, we're going to keep investing in New York City. If you've ever talked to a person that owned an apartment in New York City, no one aspires to hold the apartment for a few years, sell the apartment, and move out of New York City. They put it in their will, they give it to their children, and if you ask them why, they say there's no better place on earth to live than New York. There is no place up from there. So New York City is the end game for people that want to live in the greatest city in North America. Bitcoin is the end game for anybody that wants to own the greatest property in the 21st century.
Well, I guess that is the case, but is there a price at which you would consider selling some of the Bitcoin, pulling out? So, I mean, because you can do something with New York City. You can live in New York City. You can have a business in New York City. What do you do with the Bitcoin besides it just gather value?
Well, the real estate developers in New York City, they're not buying the real estate because they want to live in it. They're buying the real estate because they expect
Well, because they want to sell it eventually,
desirable.
Michael. I mean, let's be honest. Most of the people who are, yes, sure, some people pass it on to their children, but most of the people who are buying assets at some point want to sell the assets at a profit. So
let me say it a different way.
Okay.
People that use fiat currency as a store of value, there's a name for them. We call them poor. Okay. Anybody that's rich in the world, they own property. They own large swathes of land. The royal family of England, it didn't sell all of its property in central London in order to buy, currency or paper money. Nor did the royal family of Japan. Nor did the royal family in the Middle East. In fact, they want to own the property forever. I want you to imagine Bitcoin is. It's a city in cyberspace that's 276 blocks wide, 276 blocks high, 276 blocks deep, about 21 million blocks. Now imagine all 8 billion people in the world want to live there one day. They want to put their capital there. There's $900 trillion of wealth in the world. as people migrate from every other form of property and they've assets into cyberspace, you're going to see the Bitcoin network go from $1 trillion network to a 10x that to 100x that. And there really is nowhere else to go. It is the apex property of the human race.
So at some point, as the value of the Bitcoin on MicroStrategy's balance sheet grows, both because it's growing in absolute terms and maybe you're adding more to it, do you at some point down the line see being able to use it to transact, to invest in the business, to pay out a special dividend to investors, to buy other businesses?
We believe that the highest, best use of capital is to buy Bitcoin and hold the Bitcoin. The Bitcoin is going to appreciate in value faster than the S&P index. It's going to appreciate in value faster than commercial real estate. And so there's no point in selling the winner to buy the losers. And Bitcoin is the winner. And so we're just going to keep acquiring Bitcoin with our cash flows, with equity or capital raises, any other accretive method that comes to mind.
Something else I've noticed as I've talked to different investors, different analysts, is that MicroStrategy is actually trading at a pretty steep premium to Bitcoin itself. According to one analysis that I saw today, as much as 90 to 100% premium to Bitcoin. Is that justified, and why do you think it's justified?
Right now, an institutional investor that wants to buy Bitcoin has a choice of investing in the ETFs, of which BlackRock and Fidelity are very well known, or investing in some other company that has a Bitcoin strategy like MicroStrategy. You could think of the ETFs like ocean-going container ships. They can carry huge amounts of capital. You can invest $1 billion a day in the BlackRock ETF, so they could take on hundreds of billions of dollars of capital. They're not going to trade at a premium, but what they don't have is performance and leverage. MicroStrategy is different because our capital isn't, you can't redeem our shares, so it's possible for our shares to trade at a premium. We're an operating company, and that means when our shares trade at a premium, we can either raise capital through convertible debt or through equity. When we do that, we're doing it at a premium to the underlying assets. That captures an accretion for our underlying shareholders. So following a debt deal where we swap the debt for Bitcoin, our common stock shareholders have more Bitcoin per share than they did before the deal. So another way to say that is, if you want to pay 25 basis points and be 1-to-1 levered, then you would buy the ETF. But if you actually want to generate an accretion or a yield and not pay the fee and have leverage, then you would buy a stock like MicroStrategy. You could think of us as we're like air freight. We're Federal Express. We can take you faster, but we're never going to carry the same amount of capital in our payload as a supertanker or a container ship. So there's place for both of those strategies. And in fact, they're very complementary. I think the ETFs benefit from the existence of companies like MicroStrategy, and MicroStrategy benefits from the existence of the ETFs.
Yeah, certainly we've seen an uptick in adoption with the introduction of those ETFs. You mentioned the convertible offering. I am curious, because it's not the only offering you've done. Of course, you've done others as a way of investing in more Bitcoin. What happens if the price goes down again precipitously? What happens to the capital structure of MicroStrategy?
Well, you can see, if you look at our past, there have been periods during the crypto winter when Bitcoin went from 66,000 all the way down to 16,000. In that case, we simply hold the Bitcoin. Instead of being 20% levered, we become 40% or 60% levered. The way that we raise the capital is using convertible debt. And so the convertible debt is a unsecured instrument. It's not marked to market. It doesn't come due except in 4, 5, or 6 years from the point that we issued it. And it's not secured against any other kind of capital. So we don't have to actually do anything. We just wait for the market to recover. And that's what we did in 22. And in 23, we recovered, and our shareholders benefited from the deleveraging as Bitcoin rallied in the other direction.
All right, it has been an eventful couple of days for cryptocurrencies, to say the very least, as the ripple effects of the FTX crash make their way through the wider market. Despite this, some crypto bulls are staying put. Our next guest might well be the most high-profile Bitcoin champion of recent times, and he's still beating the drum, saying Bitcoin might well come out on top. We're happy to be joined by Michael Saylor, MicroStrategy founder and executive chairman. Michael, always nice to see you. You heard Jared talk about this recovery fund being put forth by CZ. What are your thoughts on that recovery fund, and does that help to rebuild trust in the industry?
I think that Binance is the best managed and, of course, the most well-known of the crypto exchanges. But the most important point to be made here is the collapse of FTX and FTT represents a corrupt crypto bank collapse fueled by an inflationary fiat cryptocurrency. So, as Gary Gensler has said, the vast majority of all the cryptos are unregistered securities. They're trading on unregulated exchanges. Proof of stake tokens are backed by nothing, which is why FTT could be printed into the $8 billion zone. And this is simply a very expensive lesson for the crypto ecosystem and the difference between crypto and Bitcoin.
Michael, we've just recently seen Bitcoin come off of its 52-week low, but it's also winter low in terms of the price action here. And so with that in mind, do you believe that crypto whales are looking at the price right now and still seeing some type of opportunity? And what type of concentration among Bitcoin ownership do you think, even at these lows, which are still amid a washout in some of the confidence for other investors in crypto, what does that mean in terms of the concentration of ownership going forward?
I think it's another event that's massively distributing more Bitcoin all around the world. I think there's a massive amount of accumulation of Bitcoin right now. The BTC is moving from weak hands to strong hands. I think this is one of those annealing events. 2.5 years ago, in March of 2020, we saw a similar circumstance with Bitcoin trading in the $4,000 range. If you look at the volumes of Bitcoin trading today versus then, they're up by a factor of 5 to 10x. So there's extraordinary institutional interest and investor interest in the asset class. And I think that this is going to be really helpful for Bitcoin because this is an educational moment and people are realizing the benefits of buying a crypto asset that's backed by the world's most powerful computing network and by 10 gigawatts of energy. And the difference between that and the 20,000 other cryptos that are in essence backed by nothing, and they're just like other fiat currencies.
So, Michael, let's pick up on that point. I mean, it sounds like you're saying there's going to be real divergence here between the likes of a Bitcoin or an Ether versus some of these other digital tokens. What does that shakedown look like? And ultimately, how many of those tokens survive?
Well, I think this crash accelerates regulatory intervention. I mean, in fact, in a sense, right, SBF is like the Jordan Belfort of the crypto era. Instead of the Wolf of Wall Street, they'll make a movie called The King of Crypto. This is going to bring in the SEC, the CFTC at a much greater rate. And the future of the entire industry is digital assets trading on registered digital assets trading on regulated exchanges. So to the extent that there's something good in the crypto industry, the good stuff is a digital exchange that trades 24/7, 365, trading on 8 billion Android and iPhones, digital currency available to Argentinians and Lebanese and people all through Africa and Asia that are blocked from the US financial system. The ability to issue tokens if you're a creator and monetize your brand. And the ability to deliver digital securities that trade 24/7, 365 at the speed of light, friction-free, outside of the traditional banking system, which is in essence a monopoly on assets. So those are the good things. The problem is those have been pursued by the crypto industry in an unethical, unstable, technically irresponsible fashion. And this is just highlighting the fact that a good idea pursued in an unethical, irresponsible fashion is a bad idea. I think that the regulators have it right. The idea is you should be able to register your digital asset. If you have a stable coin, you should register it with the SEC. If you have a security, you should register it. If you want your crypto token to be designated a commodity and an asset without an issuer, you ought to have a registration process. And if you want to run a digital exchange that trades all these tokens, you should be a regulated, transparent exchange that's trustworthy. And I think the regulators get it. I think the politicians get it. I think it's been a very expensive process going through Terra and Luna and Celsius and Three Arrows, and now FTX's collapse. But at this point, I don't think there's anybody in the Western world that doesn't understand the risks of allowing people to promote unregistered securities on unregulated exchanges. And so what's going to happen? You're going to see a massive shakeout. 99% of these air tokens are going to go away. They're literally the penny stocks of our era. The joke, of course, is penny stocks used to trade for a nickel, whereas some of these dog coins are trading for fractions of a penny. They're not even penny stocks. At one point, they created a token which was 0.00001 cent, so that you couldn't even read the price of the token on an 8 significant digit display on a crypto exchange. So that stuff's got to go. And what needs to replace it is ethically sound, technically sound, economically sound digital assets. The industry needs to grow up.
Michael, as a statesman in this industry, those words, comparing SBF to a Jordan Belfort, those are some big words here. So is there another way to look at it in that you view SBF as a corrupt player in this industry and he needs to be made an example of, put in jail for what he has done to the space?
He was using counterfeit money and stolen money to lobby against all the virtues in the industry, against proof of work, against Bitcoin. He was working to corrupt regulations, corrupt the political process, right? When you have actors that use corrupt, counterfeit stolen money in order to undermine the industry, it's not good for anybody. And so, yeah, I think that people need to decipher this. FTX, generated an FTT token. If you trade your own token on your own exchange with wash trading, with leverage, you can park the price at any number you want. So you want to make $1 billion, you jack the price by $3 by wash trading with yourself. Then you generate $1 billion of collateral. Then you look for a bank that'll loan you money against the collateral. And of course, nobody in their right mind should be loaning money against an air token that you manipulated yourself. But of course, Sam happened to be the CEO of a bank that made loans. So he applied for a loan from his own bank and he granted it to himself. And then he took real assets like Bitcoin from his honest customers. And then he rehypothecated them, traded them, lost them. And so this is just an egregious ethical lapse, and it can't go on. These exchanges cannot continue to be unregistered, unregulated offshore.
MicroStrategy CEO Michael Saylor will be shifting from his head role to the executive chairman position. Here to explain what that move is and why it will impact the market. Bitcoin bull himself, who is joined by Julie Hyman and crypto reporter David Hollerith. Julie, David, good to see you both.
Thanks. I appreciate it, Dave. Michael, thank you so much for being here. Obviously, it's a big day for you, a busy day for you as you prepare for this succession. I want to ask you, first of all, you've said that you are stepping down in order, in part, to focus more on your Bitcoin advocacy. And I'm just curious from a day-to-day perspective, what that's going to look like, what exactly you're going to be doing versus your role now.
Well, the CEO job is primarily to run a software business, and we've got about 2,200 employees at MicroStrategy and thousands of customers. I started that business 33 years ago, and I love it. But Fong, who's our president as of now, is a very good operating officer. And we've been working on a succession plan with him for about 4 years, making him first chief operating officer and then president about 2 years ago. And when he was president and CFO. We entered into a Bitcoin strategy. Our balance sheet has swelled by billions and billions of dollars. And we decided that the best thing for the business is to bring in a full-time CFO. We did that Andrew Kang in May of this year. And that was the catalyst that allowed us to elevate Fong to be president and CEO. And I have been wanting to assume the role of executive chairman. So this is my decision, many, many years in the making. As executive chairman, I'm going to stay engaged in the business. Many people don't realize I'm the controlling shareholder of the company, so I'm the chair of the board. I'll remain the chair of the investments committee that oversees our Bitcoin acquisition strategy. And my primary role will be advocacy, education, and innovation, working on technology, leadership opportunities. And then Fong will run the day-to-day business along with the support of Andrew, our new CFO.
Michael, given your new role, would you say that MicroStrategy's Bitcoin strategy will at all change, given that you're taking on these new advocacy-focused initiatives?
No, we're as enthusiastic as ever. It won't change, other than our goal is to acquire as much Bitcoin as we can and hold it forever. We started this strategy in August 11th of 2020. And in those 2 years, our stock is up 123% through August 1st. So we outperformed Bitcoin. We outperformed every major asset class. We're 10x better than the NASDAQ. We outperformed all of our enterprise software competitors like Oracle by a factor of 3, like IBM by a factor of 10. And we have managed to increase the enterprise value of the company by 730%, from 600 million to about $5.5 billion in that time frame. So the strategy is a big success. We're enthusiastic about continuing to both grow the business intelligence software company business and to continue to acquire more Bitcoin. This executive evolution will allow me to focus more on outgoing Bitcoin envoy and advocacy roles and corporate strategy initiatives, and it will allow Fong to run the day-to-day business as the chief executive.
Michael, I've heard you talking a lot. I heard you talk on the call. I've heard you talking a lot in interviews today about that outperformance of MicroStrategy since the strategy's inception. But from MicroStrategy's high, you've actually underperformed a lot of those assets that you've talked about if you compare their performance from their recent highs. So I guess it depends on when investors got in. And if you look at the core business as well, you guys just reported a year-over-year drop in revenue, for example, that missed estimates. So, I mean, is your only marker of success for the strategy how the stock has done since you guys started buying Bitcoin? I mean, aren't there other metrics that a potential shareholder or an existing shareholder might want to look at and not be as pleased by?
If you're a troll or a cynic and you pick any 2 dates with a short enough time frame, you can find a period during which every asset traded down. If you look at year-to-date performance of every risk asset in the world, they've all traded down. So what you just said could be said to literally every single CEO in the world because they all traded down this year. The reason that August 11th, 2020 matters is because on August 11th, the company announced a Dutch auction to buy back $250 million worth of its shares. And we announced that we were going to buy $250 million worth of Bitcoin. On that day, the enterprise value of the software company was about $60 a share. And we had $500 million of non-performing cash. So if you look at the stock today, we have gone through this transformation from a $60 a share stock to over $300 a share. And we have converted a non-performing balance sheet into Bitcoin, which is the best performing asset in the last decade. So yeah, I think that for sure, since we embarked on the Bitcoin strategy, that is the thing that matters. The stock has been volatile up and down in the months that followed. So has every other asset in the world.
Well,
if you're a shareholder, you would care about
why. I mean, but if you're a
shareholder, you want the executive team,
and that's why you're buying it. Why not just buy Bitcoin itself? Why is buying MicroStrategy better than just buying Bitcoin?
First of all, our shareholders had a $60 a share stock. That's what the software company was worth. We turned it into a $300 a share stock. So what they wanted us to do was make MicroStrategy stock go up. So we have MicroStrategy stock has performed better than every other asset and all of the competing stocks in the space. That's the right thing to do for our shareholders. As for why you would buy MicroStrategy versus Bitcoin, that's left as a decision for the investor. Some people want to hold a commodity or a property, in which case they should own Bitcoin. But I will note that MicroStrategy stock has performed better than Bitcoin since we embarked on this Bitcoin strategy, because we took a levered long position and we borrowed billions of dollars at a blended interest rate less than 2%. So if you wanted to tap into the cheap capital markets in order to make a leverage long bet on high quality property, then Bitcoin would be a very favorable investment vehicle for that.
Michael, a Bitcoin question. There's a cohort of Bitcoiners who have argued that to be a healthy network, Bitcoin can't sustain itself unless it reaps fees in some way. This is often likened to the fact that it has to become a currency at some point. And I realize that's anathema to MicroStrategy's current Bitcoin strategy, but I was curious to hear your thoughts on just sort of this topic, because if Bitcoin is a digital property, how exactly is it supposed to get development in the future? How do you see that unfolding?
The Bitcoin network is currently running on the basis of a combination of transaction fees and block subsidies, and the block rewards will go on to the year 2140. So after the year 2140, which is a long time in the future, we'll need transaction fees to compensate the miners. But the security is cumulative, and the investment in mining equipment and energy contracts is cumulative. So I don't think we have much to worry about with regard to what the fees are and their relationship to security until sometime in the year 2120 or beyond. As for, do you need to move the asset for it to have value? No, absolutely not. For example, the property in Manhattan doesn't have to move for it to have value. The granite, if you own a city block in Manhattan, the fact that it hasn't moved in 200 million years doesn't have any impact on whether it has value. In fact, you would prefer that Manhattan be built on granite or schist that doesn't move for hundreds of millions of years. That actually makes the property more valuable. And Bitcoin is that, right? What you want is, you want to know that 100 years from now, there'll be no more than 21 million Bitcoin, and that the network will be secure and have integrity and no one can change it. You don't really need high-speed transactions. You can do that on a layer 2 like Lightning, or a layer 3 like Cash App, or Binance or Coinbase, and people do millions of those transactions every day, and it works just fine.
Michael, good to get some time with you today. Again, I know it's a busy day. Michael Saylor, who is currently CEO of MicroStrategy, but as of August 8th, will be transitioning into that executive chairman role. Thanks again. And thanks to David, too. Back to you guys.
Our next guest, though, still buying Bitcoin, still very bullish on Bitcoin as he has been. Michael Saylor is joining us now, MicroStrategy CEO. Michael, it's great to see you. And I know that you've been out there putting the word out, not just that you are still bullish on Bitcoin, but you've been talking about the sort of debt covenants of the company, and that you're not at risk as we see Bitcoin fall to levels where they are. The market seems to be convinced of that, I think, at this point, judging by what's happening with your stock price. So what's next, I guess, is the question here in this cycle. We have already seen a washout in, as I said, the ecosystem. It doesn't feel like that washout is done. What do you think?
I think that the crypto industry is going through a transition. We're crossing the chasm from the first decade, which was entrepreneurial and offshore, and like the wildcatting phase of the crypto industry. And the industry is growing up to be institutionalized and public, and 10 to 100x bigger. I think the crypto industry today is full of confusion. It's obvious why we need it. The benefit is programmable money at all frequencies. But a lot of times it's not clear whether you have 10x leverage or 10% leverage. A lot of people are confused about what's a commodity versus a security versus a currency versus a token. What's the definition of an exchange? What's a derivative? And it's not even clear the difference between permanent capital and temporary capital. There's a big difference between having $1 billion forever and having $1 billion of capital in a token until tomorrow. And so clearly the industry is going to benefit, and it's going to grow partially by education, but really through enlightened regulation.
So enlightened regulation, or regulation really of any kind, it doesn't feel like it's that imminent, right? On the education front, I mean, you've been talking about it for the past several years. I feel like most lay people have had a lot of questions about crypto over the past several years. So what's been missing in that education piece, and how do you still fix that, leaving the regulation piece aside for a moment?
You know, I think sometimes it takes time. If we think about the securities model, it took us 100 years before we understood what it means to disclose a security. And then derivatives took about a decade, and now they're fairly well understood. And ETFs have gone through this transformation. I actually do have confidence that enlightened regulation is coming this decade. I mean, not in the next few weeks, but in the next few years. Until we get that regulation, the safe choice is Bitcoin. The use case is a commodity, not as a currency, not as a security, but rather as a commodity where you custody it in a place that you have confidence in, either self-custody or a very institutional grade custodian.
What requirements do you think could come as a result of that regulation?
You know, it's a good question. First of all, if the regulators make it clear how you establish a digital commodity, right? A digital commodity is based on proof of work without an issuer. We need a way to certify digital commodities. If I can launch a proof of work network in a fair fashion and without an issuer, I've got a commodity. That's one treatment. Digital currencies like stable coins, they need a certification technique as well. And the question is, how much collateral is backing it? Is it 10% collateralized, 100%, or 1,000% collateralized? Securities need a clear guidance for how do I issue a crypto security? Is it exactly the same as any other security? We need a definition of tokens. What's a crypto token? How do I disclose and create a crypto token? What are my rights and obligations with it? I think we need a definition of an exchange. There's a lot of confusion about what an exchange is in the crypto ecosystem. We know that 24/7 exchanges that have lots of functionality are good things, but there's a big debate about what they can do, what they should do. And then, of course, there's even a question about what is a crypto bank, right? Was Voyager or Celsius, were they banks? Was BlockFi a bank? I can see the benefit of having a crypto bank, but we need more structure there. So I think that guidance and clarity, it's going to come. It's going to be good for everyone. It's going to grow the industry. It's especially going to be good for Bitcoin. But also, it's going to allow all the entrepreneurs and all the innovators to act much more rapidly and much more decisively than they are right now. And I would say, clearly, the ball is in the court of the SEC primarily, to a lesser extent. The OCC has a role, the FDIC has a role, the CFTC has a role. Congress will probably get involved at some point. But this is what the industry needs to grow and get beyond its current stage.
Michael, let's talk about MicroStrategy for just a second here, because you've got the decline in Bitcoin prices. You've got what seems to be the decline in demand for enterprise software right now. You guys had a decline in your top line revenue last quarter. We've seen a lot of retrenchment in the tech industry really writ large. What about you guys in terms of hiring this year, or maybe layoffs this year, in terms of any kind of retrenchment in spending on your part?
Well, we've got a very stable, very profitable business. And in fact, our business is like 99% of the other businesses on Earth, which is we spent many, many years to figure it out, and we can manage it in a stable fashion, but we can't necessarily grow it 20 or 30% a year over year, like the digital monopolies. So MicroStrategy's strategy isn't different than any private company or 99% of the other companies. And that strategy consists of run your business efficiently as best you can, grow it when you can, and then make sure that you invest your cash flows into a treasury asset that's going to appreciate over time. So, of course, we've chosen Bitcoin, and Risk assets are struggling this year, right? This is the worst year of 50 years for risk assets. But again, that's a universal challenge that everybody faces. And if you look out beyond 4 years and base your decision making on fundamentals, I think you conclude that Bitcoin is the right choice for a Treasury Reserve asset.
But again, going back to the core business, are you guys retrenching on investing in that core business, and particularly on the staffing side?
No, we wouldn't cut back. We continue to hire. As I said, we're profitable. We remain profitable, and if you look at our business, we've got 2,000 employees. All but about 5 of them focus upon creating business intelligence software for our customers. And then 5 to 10 people are focused on the Bitcoin strategy, which is a Treasury Reserve strategy. And we're going to motor through this. I think we're quite confident in the business, and we like the transition that we see from on-premises software to cloud software.
Crypto winters usually spark a lot of new projects, or at least a washout of the projects that are non-viable. In this crypto winter, is there kind of a point where you believe or are comfortable with a bottoming out of Bitcoin prices?
Well, I tend to focus upon the 4-year moving average. And if you look at the 4-year moving average of Bitcoin, we've only touched that a few times in the decade. And generally, historically, those have been good opportunities to enter. And so we're about there right now. I think that does indicate that the industry is rationalizing, and we're forming a solid base around this point.
And remind us, are you actually coming in and buying here, or are you just holding what you guys have?
Our strategy is to acquire and hold Bitcoin. So as we generate cash flows, we sweep our excess cash flows into Bitcoin, and so we will continue to buy Bitcoin at these levels or any level. It's just like a dollar cost averaging into a strong property asset.
Michael Saylor, MicroStrategy CEO. As always, thanks so much for the time and the discussion. We appreciate it, Michael.
Crypto markets hoping for a reprieve following weeks of downward pressure and, of course, last week's implosion of the stablecoin Terra. They're not really getting that reprieve today, at least not on a broad scale. For a longer-term look at crypto, though, let's bring in Michael Saylor, MicroStrategy CEO, who, of course, has been a longtime proponent of the cryptocurrency, holds it on the company's balance sheet, et cetera. Michael, it's good to see you. So let's talk about the recent action. And I'm also, of course, it caught my attention, the comments from FTX's Sam Bankman-Fried in the FT over the weekend, where he talked about that Bitcoin is not really going to be a viable transaction mechanism, even if it can still be a good store of value. Does it need to be a good transaction currency in order to reach some of the heights that folks such as yourself have talked about?
I think Sam left off mention of the Lightning Network. It's pretty clear that Bitcoin's the future of money and Lightning is the future of payments. And if you're going to do payments and transactions high speed, you're going to need a base layer that's ethically sound, economically sound, and technically sound, and that's what Bitcoin is. But then billions and billions of transactions are going to go on a layer 2 like Lightning, which is an open, permissionless, ethical protocol. Or they're going to move on layer 3s like Cash App or PayPal or Apple Pay or Visa or MasterCard. Those are securities. They're companies that are custodians that are moving payments back and forth. So I don't know why Sam left that off, but it's pretty obvious to every Bitcoiner that payments are going to take place on layer 2s and layer 3s.
And so for the holdings, though, at this point that you've been able to amass over the years, one huge thing that sticks out is in terms of the crypto winter that we're in right now versus the one prior is the number of larger companies that have holdings such as yours. Is there a certain price target at which you would have to start liquidating some of those holdings?
No, we're in it for the long term. Our strategy is to buy Bitcoin and hold the Bitcoin. So there's no price target. I mean, I expect we'll be buying Bitcoin at the local top forever, and I expect Bitcoin's going to go into the millions. So we're very patient. We think it's the future of money.
So you don't sound like you have wavered whatsoever, Michael, as we have seen this downturn in price. Of course, we've seen downturns in price before. Is this one different at all? Is there any doubt in your mind when you watch the action that we've seen over the past few weeks?
I think that the entire crypto crash has made a couple of things clear. First of all, there's one perfect thing, that's Bitcoin. That's a decentralized, ethically sound, technically sound, economically sound money. There's a bunch of imperfect things. There's the stable coin, the USD, Circle, and Tethers, and BUSD, and et cetera. Everybody wants a stable US dollar. They're struggling with how to do it in a compliant fashion with transparency. Then there's a lot of dangerous things. There's 19,000 dangerous things. It's basically all the unregistered security crypto networks running on proof of stake that have active management, project management teams, that have ICOs, that have some centralization in them. And Luna and UST was an example of one of those crypto security tokens that was mismanaged, and it blew up. And what's going to happen is an entire generation of crypto people are going to get educated on why Bitcoin is the superior asset. And then a bunch of regulators are going to accelerate their regulation of stable coins and accelerate their regulation of the crypto security tokens. And the winner of that entire exercise is Bitcoin, because once people figure out why Bitcoin is superior to everything else, then the institutions are going to come in with large sums of money. And we're not going to have to struggle through this mess of explaining why we're different than 19,000 other crypto tokens.
And just quickly, Michael, just to be clear here, you traditionally have been sort of a Bitcoin maximalist, so to speak. So to be clear, you weren't invested in things like Terra or Luna. Are you in any of the stable coins?
Well, first of all, I'm not even sure. Luna is not a stable coin, but we wouldn't invest in an unregistered security. So 99.9% of everything in the crypto space is an unregistered security. And I might invest in a registered security one day. I mean, if you ask me would I buy Apple stock or Google stock after reading the 10K and 10Q disclosures, maybe, maybe not, but that's not our strategy, right? But I really don't think that any public company or public investor can invest in an unregistered security. That's venture capitalists. So no, we're not invested in it. It's pretty obvious that they're all unregistered securities. And I think the crypto industry hasn't really addressed that issue. That's the elephant in the room. And the Luna Terra meltdown has actually brought this to the forefront. And now I don't think people can ignore it.
Michael, there's been some stories recently. I think Fortune ran with this one. If Bitcoin falls below 21,000, there might be some form of margin call over at your company. What does that mean? Help us understand, what does happen if crypto continues to fall?
That's all FUD. Look, we started with $5 billion of unpledged collateral. We borrowed $200 million against it. So that's a loan to value of 4%. If Bitcoin fell 95% from that number, then we'd have to post additional collateral. People got their hands around the fact that we would adjust some collateral if Bitcoin ever got to 21,000, but it's really a non-issue whatsoever. You can think of it as like leverage of 1.04. If I was levered 10 to 1, we would have borrowed $50 billion against that collateral, but we borrowed $200 million. It's really it's a nothing issue.
What type of regulation do you expect to come over the course of this year, as we've increasingly heard Bitcoin and broader digital assets discussed acceleratingly in Washington, and how does that impact where you would add on to your existing crypto positions?
Okay, well, first of all, we won't add on to crypto positions. We will add on to our Bitcoin position whenever we come into excess cash. And that's a very simple strategy. With regard to regulation, there's been a deadlock in DC and on Capitol Hill around stablecoin regulation and around security token regulation. I think the administration wanted to move faster. Congress was moving slower. I think that this meltdown of Luna, UST, that's going to accelerate the regulation of stablecoins and security tokens, which will be a good thing for the industry.
And Michael, finally, getting back to price for just a second here, do you think that Bitcoin will remain sort of in the doldrums as long as the Fed is in a rate-raising cycle?
No, I mean, I think that clearly Bitcoin's been drawn down with all the risk assets in this deleveraging tightening cycle. But there are also the crypto crash issues and the Luna Terra impact. So over time, I think as people get educated and as they get more comfortable, I think we'll recover from this drawdown. Fed policy is very difficult to opine on or to predict. And so clearly they have a huge impact on how people value all assets, depending upon what they say from day to day.
Michael, we certainly do appreciate the time here discussing not just your own holdings, but the broader landscape as well. MicroStrategy CEO Michael Saylor, thanks for the time.
Bitcoin prices are still having a tough time reclaiming the $40,000 level, with weak results out of Facebook not helping investor sentiment. Let's bring in a leading voice in all things crypto, MicroStrategy CEO Michael Saylor. Michael, always nice to see you. Thanks for taking some time here. Have you been frustrated with the price action in Bitcoin so far this year?
Now, my time horizon is a decade or more. The answer to your question, by the way, as to what you do with your Bitcoin is you hodl your Bitcoin. We're hanging out. People buy Bitcoin because they want to buy an asset that they understand that might have value in 100 years. And the truth is there's no security trading on the NASDAQ or the New York Stock Exchange right now that you can understand 100 years from now. We got a long time horizon. And so, this is near term. There's a lot of risk off volatility, but I don't think that bothers any true Bitcoiner.
And we know that you are a true Bitcoiner, of course, Michael, because we've talked to you about it, of course. You tweet about it. You've put it on the books at your company and on in your personal accounts as well. I would ask, though, when an individual buys Bitcoin and it goes down, it has an effect. When you put it on your balance sheet and it goes down, it costs you, right? It costs you in terms of the accounting for your company because you get penalized when it goes down, but you don't benefit when it goes up until you sell it.
Go ahead. Your question?
What do you think accounting rules need to change on that front?
Indefinite intangible accounting means that you can only mark it down, you can never mark it up. And in truth, I'd be better off from an accounting point of view to buy a stack of comic books or baseball cards, because I would only be evaluating them for impairment once a year, as opposed to every minute on a Saturday night while people are skittish about a risk-off trade. So I think that the gap accounting isn't a positive factor for a company that relies heavily on it. I believe that FASB's taken this up as an issue. We'll see what they say. Clearly, it would be better if there were fair value accounting for a publicly traded company. And if we ever see a transition from indefinite intangible to fair value accounting, that would be a catalyst for more corporate adoption of Bitcoin.
But could it also, in a sense, allow companies who are going to add Bitcoin to their balance sheets to sort of quote unquote cook their books or to make things look better than they are? I guess you could argue on the flip side, things maybe look worse for MicroStrategy than they are right now because of that other accounting.
With the current accounting for when Berkshire Hathaway accounts for their ownership of Apple stock, they do it via fair value accounting. So I think that either accounting is appropriate if everybody agrees that's what they're going to do, and then the accountants close the books at the quarter and they account for the assets based upon that guiding set of principles.
Michael, do you see yourself, despite any accounting issues as it pertains to how you account for Bitcoin, do you still see yourself using leverage at some point to go out there and launch more Bitcoin products and perhaps change your strategy at the company?
We have used leverage, and if you could borrow money at 1% interest or 2 or 3% interest, and if you thought that assets were going to appreciate at a dramatically higher rate, then it makes total sense. I think we're in an inflationary environment. The Argentine peso has lost 93% of its value over 4 years. In Lebanon, they've lost 93% of their currency value almost overnight. In environments like that, it's almost criminal not to use leverage. You should borrow in the local currency, and then you should buy a stronger asset. In the United States, I think you can expect a 15% or more monetary inflation rate for the coming few years. So if you could borrow money at substantially less than 15%, then your arbitrage is clear and obvious. So yeah, we think it's a good idea if properly used. It all comes down to the terms and conditions. With all leverage, I mean, I would not recommend anybody go and go long Bitcoin 20-1 in a mark-to-market margin loan situation. You're going to get wiped out. But if you have the ability to mortgage your house for 30 years for 2.5% interest, and if you knew that the currency was going to lose 15% of its value a year, then by all means, you ought to buy a house with mortgage. And if you have a house that's unmortgaged, then drawing down a credit line against that real estate in order to invest in a tangible, scarce, desirable asset that's going to appreciate in value at a much higher rate is a rational business decision.
Michael, before we let you go, as someone that has used Bitcoin to diversify their business, look what we're seeing out of Meta this morning here. Challenging quarter. Now, they announced recently they're getting out of the crypto space. Was that a mistake for them? Because if they added Bitcoin into their business and built that out, theoretically, maybe they would be able to just avoid some of these Apple privacy issues and just report better earnings.
Well, to be clear, I think the mistake was not getting into the crypto space. Meta pursued a DM project, and that wasted many, many years of their time. If they were to adopt and embed Bitcoin into their product, they could deliver a compelling offering to billions of people. And I think it'd be worth hundreds of billions, if not trillions of dollars to Meta. So the answer to Meta's problem on the revenue and the P&L side is embed Bitcoin and Lightning into their product line. And the answer to the problem of how do you make cyberspace more secure and improve the quality of your products is to embed Bitcoin and Lightning into your product line. I have 10,000 Instagram bots in my DM, and they're not real people. They attack me. You can't really trust anyone that communicates with you in cyberspace. You can't trust scammers coming at you in WhatsApp. Every day I have dozens of WhatsApp bots attacking me. So if you want to clean up WhatsApp, if you want to clean up Instagram, if you want to make Facebook, and for that matter, YouTube and Twitter safe for children and safe for the world, you ought to wrap those personas in a layer of digital energy, and that would be Bitcoin on Lightning. And, Meta's solution is, Jack Dorsey pointed this out. He said, if Bitcoin had existed when Twitter was founded, they wouldn't be so reliant upon advertising, and you wouldn't have this surveillance capitalism problem. Meta's solution is to go from a pure ad model to a value creation model where they become a bank in cyberspace. There's no reason why they couldn't accumulate $1 to $10 trillion of assets on their cloud platform if they built Bitcoin and Lightning into their product line. So I think that's the solution to the problem. They have not embraced Bitcoin. That's the problem.
All right, let's leave it there. MicroStrategy CEO Michael Saylor, always good to get some time with you. We'll talk to you soon.
There was a hearing yesterday on Capitol Hill, of course, the House Financial Services Committee, considering the question of whether and how cryptocurrency should be regulated differently. It was a relatively cordial, friendly hearing, but a lot of attention on it, of course, from the crypto industry. And I want to bring in someone now who has benefited quite a bit, or as company shares certainly have, from investing in Bitcoin. That's Michael Saylor, the CEO of MicroStrategy, and he joins us now. Michael, thank you for being here. I want to start on this question of regulation because it has been such a hot topic within the crypto industry. And some of the folks who spoke yesterday, Sam Bankman-Fried, for example, he said a more clear regulatory structure would actually be helpful. He's certainly not the only person who has said that. I'm curious where you stand on all of this, whether regulation in the United States specifically is bullish or bearish for Bitcoin.
Yeah, I watched a lot of those hearings yesterday, and I think the big winner of the congressional hearings is Bitcoin. It's pretty clear that there's consensus at the congressional level in support of crypto. It's pretty clear that investors want to invest in the new digital economy. Bitcoin's universally acknowledged as common property and not a security. So there's no regulatory overhang on Bitcoin. If you want digital property as a long-term store of value, then every nation in the world, China, Europe, the United States, they all acknowledge that Bitcoin is digital property. It's not a security. There's a lot of question about how other security tokens will be resolved in the crypto exchanges and DeFi. And obviously, there's a lot of enthusiasm for it. There's a lot of pressure to move forward with regulatory clarity. I think it'll happen. But in the meantime, I think the one takeaway that any reasonable investor could have is that Bitcoin's here to stay, and Bitcoin's an obvious solution. And there really isn't any regulatory uncertainty around Bitcoin's status as property, a commodity, and a store of value. We can debate how volatile and how speculative it is, but the regulatory issues really aren't outstanding at this point.
Hey, Michael, it's Brian Chung here. I want to drill a little bit more on the store of value side of things, as you just illustrated. One of the arguments for Bitcoin and other cryptocurrencies is its ability to usurp the US dollar. But stablecoins caught a lot of attention, and what caught my ear was actually some conversation about how stablecoins could actually entrench the US dollar status. I want to play a clip of Jeremy Allaire from Circle talking about this with Congress yesterday. Take a listen.
Dollar stablecoins are doing trillions of dollars of transactions. The experimental beta of a Chinese yuan, which is government controlled in China, has done $10 billion of transactions. So the United States is winning. This has the potential to grow at a very significant speed around the world and benefit the US dollar and benefit American businesses and households. And so I think that's one really, really critical thing to understand. And I think the primacy of this infrastructure and the development of this infrastructure, it is a strategic national security and national economic priority for the United States, and we need to get going on it right now.
So, Michael, I guess any thoughts on how stablecoins kind of play with the broader goals of crypto? Because it seems like an implicit acknowledgement that while Bitcoin may be, attractive, it has other attractive offerings, means of payment is one that might be better served by stablecoins.
Yeah, I think it's a mistake to characterize any of the cryptos as currencies. They really should be thought of as crypto assets. Bitcoin is a crypto asset. It's a property. It's not a currency. The IRS determined that in 2014 when they designated it as property. The dollar is a currency. The digital dollar is a digital currency, and everybody in the world wants two things. They want a digital currency and they want the dollar, right? The world wants 10 or 20 or 30 trillion dollars worth of digital dollars. They don't want the lira, the peso, the bolivar, the naira. I think that the digital dollar is destined to collapse the 100 weakest currencies in the world, and the US dollar, which is currently the reserve currency of the world on 20th century banking rails, is going to be the reserve digital currency of the world on 21st century crypto rails. I don't think there's any dispute about that, and Jeremy's correct. The United States needs the digital dollar. We need stable coins to spread. Now, with regard to Bitcoin, Bitcoin is digital property. The world needs digital property to hold their money for a decade or a century. They need the digital dollar as a medium of exchange to move money back and forth day by day, week by week. Both of those are going to be big winners in the coming crypto era. There's no doubt in my mind.
And Michael, as we've seen more institutions enter the cryptoverse, will more institutions getting involved, will that bring a threat to the financial system?
No, the only thing that's threatened by Bitcoin is gold. Here's what's happening. People are exchanging their weak currencies for strong currencies. And that means they want to trade the Turkish lira for the dollar or the euro. They want to trade, there's no African currency or South American currency which will survive. People don't even want to hold the Chinese RMB, right? If they could trade the CNY for the US dollar, they would do it. That's why the Chinese have capital controls. So the first dynamic is the trade from weak currency to strong currency as a medium of exchange. The second trade is weak property and weak assets to strong assets. Gold is a weak property. You're better off not to buy a second investment property. You're better off not to hold negative yielding bonds. What you want to do is hold a strong property that's going to appreciate in value, at least at the rate of monetary inflation. So you can expect that Bitcoin can grow from $0 to $100 trillion, from $1 to $100 trillion in market cap just by replacing gold, silver, and demonetizing real estate and negative yielding bonds and other monetary indexes. These are assets. I think you can expect the US dollar is going to expand from $170 billion worth of stable coins to a trillion to 10 trillion, maybe 20, 30, 40, 50, $100 trillion worth of US dollar stable coins. No, I mean, it's not a threat. In fact, I would turn it around and say, if the US dollar is going to remain the world's reserve currency, it needs to move as a stable coin throughout the entire world. And, the government doesn't care whether you sell your gold to buy Bitcoin. It's not an issue. In fact, the best thing you could do is sell all $10 trillion worth of gold and buy Bitcoin. Gold's a dead rock. It's the worst performing asset the past decade, bar none, no debate, and there's no hope for it.
Michael, you and a lot of other folks who are Bitcoin believers, and I use that word not lightly, right? You have this philosophical basis. You have sort of a systems-based basis for your thinking. You don't often hear a lot of people talk about risks to Bitcoin. Are there any risks? Are there any significant risks to your thesis that you're concerned about?
The only legitimate risk is a black swan, an unknown unknown. Otherwise, Bitcoin is the best engineered asset to serve as a digital property in the 21st century. And we've got 12 years of history. Has it been hacked? No, it hasn't been hacked. Is it going to be banned? No, it's not going to be banned. Can it be copied? We copied it 10,000 times. Every copy's failed. So, yeah, I suppose unknown unknowns. But if you look at the tangible risk of you want to own Turkish lira right now, if you're in Turkey, what's the Afghan currency? You want to have a hotel in the middle of Africa? Every other form of property, and asset has a higher risk right now. And there's an incredible need for a non-sovereign store of value that will move at the speed of light on technology networks. And Bitcoin happens to be the strongest, best, dominant, best engineered asset to meet that requirement in the world today.
Well, then, Michael, does that make the case that prices for Bitcoin are likely to go up forever?
Yeah, Bitcoin's going up forever. That's my belief. I've said it before, Brian. Bitcoin is going up forever. It's a simple, but let me be more articulate. The price of Bitcoin is going to be driven by adoption, and as more and more of the world adopts Bitcoin, that's going to create demand for it. It's going to be driven by technology as it gets built into Facebook and Google and Apple. It's built into Square and PayPal, and so as you build in technical utility, that's going to drive more adoption. It's going to be driven by inflation, and the monetary inflation rate in the US is probably 15 to 20% for the next 4 to 8 years. But the inflation rate in Turkey and Argentina is 40, 50%. So monetary expansion in a fiat frame of reference is also going to drive up demand for a scarce, desirable global asset. And all three of those drivers are with us for the next decade. So there will be volatility. It's not going to go up uniformly in a perfect exponential curve. But, I don't think we're going to see a world where technology slows down. And I don't think we're going to see a world where currencies don't keep inflating.
So, Michael, and obviously all of this kind of fits within what you've been doing over at MicroStrategy, which we've been talking a lot, but you do have a day job over there as the CEO. Wondering how that fits into everything. You just tweeted out earlier this morning you've actually purchased an additional 1,400 Bitcoins. That means you've got, about 3.6, you acquired about 122,000 for 3.6 billion. What does that mean for the strategy of the company? And is it hard to message all of this to investors, to people maybe inside your own C-suite with regards to why a tech company, a cloud services company is getting into Bitcoin to the degree that you are?
In an environment where the money supply is expanding at 20% a year, you have to take any value stock and you have to discount the future cash flows with a 20% discount rate. So I think you don't have to be a rocket scientist to figure out that unless you're a digital monopoly and you can grow your cash flows more than 20% a year, it's hopeless to hold value in your equity. So any kind of operating company that isn't a digital monopoly with a super high growth rate can't survive. It's not going to long persist unless you have a property strategy or a balance sheet strategy. And the balance sheet strategy is you invest assets into a property that's going to appreciate faster than the rate of monetary inflation. So the MicroStrategy strategy on the P&L is 2,000 people selling enterprise software, and we're growing 5, 10%, some growth rate, but we're not growing north of 20%. And then on the balance sheet, we've just swept our treasury into Bitcoin. And as in the first month or 2 months, it took a lot of communication. Now I think our investors understand that we're long Bitcoin. In fact, we're leveraged long Bitcoin. So we're going to acquire and hold Bitcoin for the long term. And we do it with our cash flows. We do it with equity issuances. We do it with convertible debt. We've done it with senior secured debt. And in essence, we're short the dollar. We're long Bitcoin. And if Bitcoin continues to appreciate, it's appreciated 160% a year for the last decade. So you could figure out that we're kind of borrowing money at 1% interest, and we're loaning it out to the Bitcoin network at 160% interest. And we're scraping the arbitrage. And that's what puts value in the stock. The MSTR stock then becomes a derivative of Bitcoin, and we become the first digital property company that we've seen in the world. And we think that's a really good strategy in a world where digital property is universally desirable.
Michael, by the way, we're about 30 seconds from the opening bell of the good old-fashioned stock market. I should just mention that's going to start trading in just a sec. We're looking right now at a chart of the correlation between your stock and Bitcoin, and it's not a one-to-one correlation this year, but it's up there, right? At times it gets to a 0.8 correlation. So I don't mean to be flip here, but why bother with the software part? At some point, what's the end game here? At some point, are you just going to be a derivative play on Bitcoin? Are you just going to be effectively a digital property company and not have the rest of it?
No, it's a huge benefit for us to be an operating company as opposed to like a SEC 40 finance company. As an operating company, we can generate cash flows and sweep those cash flows into Bitcoin. We can finance the cash flows at low cost of capital. And that's another benefit you have as an operating company. We have flexibility to pursue financing strategies of selling volatility, or if I was an ETF, no ETF can go borrow $2.2 billion at 1.5% interest to lever up. So we have a lot of flexibility on the balance sheet side and on the operational side. And each strategy is mutually complementary. Our employees are happier, our customers are happier, our brand has accreted by 100x since we assumed the Bitcoin strategy. So the enterprise software business is more profitable and it's got better prospects because of Bitcoin. And then, of course, on the Bitcoin side, we only started with 500 million in capital, and we invested 250 million in capital, and we figured out how to acquire 3.66 billion in capital to buy Bitcoin with it. And so you can see you need to be an operating company to do that. And we're unique, in the world as that synthetic Bitcoin miner and that operator.
Indeed you are. Michael Saylor, really interesting to get your thoughts and perspective here this morning. Hope you'll come back again and chat with us. Michael Saylor is the CEO of MicroStrategy. Thanks again, appreciate it.
Tesla's Elon Musk isn't the only high-profile name investing in Bitcoin. The business intelligence software firm MicroStrategy is actually the first publicly traded company to add cryptocurrency to its balance sheet. It currently holds about $3 billion of the digital currency. And CEO Michael Saylor tweeted at Musk back in December, urging him to get into Bitcoin, saying, quote, Elon Musk, if you want to do your shareholders a $100 billion favor, convert the Tesla balance sheet to Bitcoin. Joining us now is MicroStrategy CEO Michael Saylor. Welcome. Thanks for being here. So Elon Musk listened. He went all in, $1.5 billion worth. What does Musk going into Bitcoin mean for investors and for the future of the digital currency?
Well, I think in the current macroeconomic environment, most corporations are beginning to realize that their cash is going to be a depreciating asset, and they need to turn their balance sheet into an appreciating asset. So the obvious thing to do is to convert dollars that are being inflated at, expanded to 15% a year into a scarce digital asset. And that's what Bitcoin is. So Elon Musk is very progressive and Tesla is very progressive. I think this is part of a trend toward the digital transformation of balance sheets as people move from analog, traditional treasury assets like cash and bonds into Bitcoin.
I want to
Michael,
bring in
Yahoo
Finance Julia. Oh, I was just going to say hello to Julia. And there she is.
It's Julia LaRoche here. Let's double click on that. You're talking about a digital transformation of the balance sheets. And of course, we know, I guess historically, folks have been pretty conservative about the balance sheet. You did have a seminar last week. I want to kind of elaborate a bit more on the pitch that you're giving to executives on this, and what is kind of the hurdle that must be overcome for them to get comfortable with adding this digital asset to their balance sheets?
Well, I mean, the pitch is Bitcoin is digital gold, and it's sitting on the world's first digital monetary network. That network does the job of gold 1,000,000 times better than gold. You can move it at the speed of light. You can program it 1,000,000 times a second. And it's been appreciating versus the US dollar more than 200% a year on average for a decade. So I think at this point, Bitcoin has emerged as the institutional safe haven asset. If you're a corporation and you generate $1 billion in cash flow and you buy back your stock, you're $1 billion closer to insolvency. If you borrow $1 billion to buy back your stock, you're $2 billion closer to insolvency. If you want to run your company to the benefit of your shareholders, of your customers, of your employees, and of your local community over the long run, you can't decapitalize the company. And in the modern era, cash is becoming a liability because the money supply is expanding at 15% and the purchasing power of the cash keeps degrading. Holding a 15% degrading asset for 8 years means you lose 75% of shareholder value. So the pitch is convert your balance sheet from a liability into an asset to the benefit of your stakeholders and use the world's first digital monetary network to do it. Bitcoin was engineered to do this.
I do want to kind of bring this topic up with you. Elon Musk, of course, has been tweeting a lot about cryptocurrencies, Doge in particular, also adding hashtag Bitcoin to his Twitter profile. And if you look back a couple years ago, there were some issues around tweeting about Tesla, taking Tesla private. There's a whole SEC settlement involved there. So what do you think of regulations in this space? And when you see more publicly traded companies add it to their balance sheet and how they can kind of talk about it on social media, do you think we'll see regulations come in? And if so, what should those look like?
Well, I think there's been a great advance in regulatory clarity over the past few years. I think the IRS and the SEC have both designated Bitcoin as property, and I think that's been very good for the asset class. I think that we can expect a few more regulatory advances that'll provide more clarity. And as Bitcoin approaches regulatory parity with other types of assets like stocks and bonds and gold, I think it's going to remove the few remaining barriers that have given institutions pause. I think 1,000 institutions, 1,000 corporations started adopting Bitcoin as an asset for investment in the past 12 months. I think there'll be an avalanche of thousands more that'll be coming as they start to see that this is a very high quality Treasury Reserve asset on parity with other assets.
You know, it's one thing, Michael, to talk about companies investing in Bitcoin and seeing it take off on Wall Street, quite another to see it be adopted and go mainstream on Main Street. Today, we saw Twitter's CFO come out and say in an interview that they're thinking about playing in Bitcoin to the extent that they might actually pay vendors and employees in the cryptocurrency if they ask for it. What do you think some of the hurdles are to getting there? How do we get the consumers to buy in on the idea that Bitcoin could possibly take on the US dollar?
Well, you know, I don't think Bitcoin is going to take on the US dollar. I think that cryptocurrency is a misnomer. Bitcoin's digital gold. What Bitcoin is doing is rapidly replacing gold as a non-sovereign store of value. We've already got something on the order of 120 to 150 million people in the world using Bitcoin as digital gold. I think that number is going to rapidly march through 200 million, and we'll have 1 billion people that want to hold digital gold on a mobile device in the next 5 years. So when you think about it, I think the right way to think of it is I want to convert my long-term treasury reserves into something which is 1 million times better than gold, that moves at the speed of light. And it doesn't matter if you're a company or you're an individual or an institutional investor. They all have the same problem, which is how do I preserve my monetary energy over long periods of time? Expenditures day to day that you would normally do in dollars, people will continue to do in dollars. The payment rails are going to be MasterCard and Visa and PayPal and Square Cash. The euro and the dollar are going to do just fine. I think that the people that ought to be really concerned are gold bugs. Anybody that's storing their money in gold is got a big bullseye on their forehead, and that's at risk.
Michael, I guess one last question before I let you go. I should point out that you are the longest serving publicly traded company, CEO of an enterprise software company. So you've obviously experienced a lot. You mentioned earlier digital transformation, now digital transformation of the balance sheet. And I kind of want to bring this up with you and tie it in here. How do you think about this kind of generational shift? I've seen surveys at least a couple of years ago, kind of how more millennials favor cryptocurrency, Bitcoin, things like that. But as you kind of go up in older generations, not so much. So how do you kind of think about it as also a generational play here for companies?
Well, I think the millennials, they discover things quickest. I mean, it was college students that found Facebook, but eventually everybody joined Facebook. I think it was 20-somethings that loved texting on mobile phones, but eventually Warren Buffett bought Apple stock. I think that millennials love Bitcoin because it's digital gold, and there's no way that 100 million people can buy a bar of gold through their mobile phone, but they are buying digital gold on Square Cash or PayPal or the like. But having said it all, they're just the vanguard. Eventually, the entire society is going to buy this. Institutions are coming into it. The Generation Xers are coming into it. And so it's an idea whose time has come. The millennials are leading the way.
All right, we're going to leave it there. To be continued for sure. Michael Saylor of MicroStrategy, thanks for being with us.